Welcome back to Investing Talk Podcast. Today we're tackling a question many of you might be asking right now. Is Surf Air Mobility a good time to buy? We've sifted through the latest analyses and reports to give you, hopefully, a clear, nuanced picture of this intriguing company. Before we really jump into this discussion, if you're finding these analyses helpful, please take a moment to subscribe, like this discussion, maybe leave a comment with your thoughts. Your feedback genuinely helps us reach more listeners. And hey, if you're feeling generous, consider buying us a coffee. It truly fuels these explorations. Also, if there's a specific company you'd like us to look into, just, leave a comment below. Our mission today is to really unpack Surf Air Mobility. We'll be examining its financial health, competitive standing, its current valuation, and what the market sentiment is truly telling us. It's a fascinating company, kind of at the intersection of innovation and transportation, and we want to help you understand all the moving parts, separating the hype from the reality. So let's start with the basics.
What exactly is Surf Air Mobility, and what do our sources tell us about its core business model and how it's currently performing?
Right. Well, Surf Air Mobility, they operate an air mobility platform. They're focusing on scheduled commercial flights and also on-demand flights, mostly here in the U.S., but abroad too. What's truly fascinating here, I think, is that they're targeting a very specific niche: accessible regional travel.
Accessible regional travel.
So like bridging those gaps between smaller cities.
Exactly. Imagine needing to fly, say, a couple hundred miles to a smaller city, but finding commercial flights are either non-existent or they're ridiculously expensive, maybe require 2 layovers. Surf Air aims to bridge that exact gap, making those shorter regional journeys, as convenient as a quick drive, but obviously significantly faster. It could effectively open up new travel corridors.
That focus on regional travel certainly carves out a unique space for them. Sounds like they're trying to solve a real pain point for travelers. Now, how are they doing financially? The reports mention some pretty significant revenue growth, which is often, a critical indicator for a company in an emerging sector like this. Absolutely. And this revenue growth is, it's a critical signal. They reported strong revenue growth in 2024. They more than doubled their revenue to $119.43 million.
Wow, doubled.
Yeah. To put that in perspective, that's a massive 97.38% increase compared to 2023. This isn't just a number. It's really a testament to a business model that's rapidly gaining altitude, clearly resonating with its target market. In the fiercely competitive mobility sector, such rapid expansion suggests Surf Air isn't just surviving, but actively winning market share, even if it's still bleeding cash.
The insight here, I think, is to look beyond the top-line number and ask, how are they capturing this demand in a segment that's just ripe with innovation?
That kind of revenue growth is definitely eye-catching. Suggests a strong market for what they offer. Yet in these high-growth sort of early-stage companies, there's often a flip side to that aggressive expansion, right? Are we seeing similar flags when it comes to profitability? Yes, and this raises an important question about sustainability, especially for companies in these hyper-growth phases. While revenue is indeed growing impressively, profitability remains a significant challenge for Surf Air Mobility. Their net income over the trailing 12 months, what we often call TTM, it's negative $57.42 million. Yeah, and their earnings per share, or EPS, for that same period, stands at negative $3.44. Now, the good news, maybe the silver lining, is that their losses did decrease by a substantial 70.12% from the prior year. So that shows some improvement in managing costs.
Right, so moving in the right direction, but still deep in the red.
Exactly. They're still not profitable. This isn't just cash burn. It's the high-stakes gamble inherent in most disruptive tech plays, isn't it? The key insight isn't that they're losing money, but maybe how long they can afford to, and whether their accelerating growth curve will actually intersect profitability before their cash runway shrinks. It's kind of a race against the clock.
So the top-line growth is clearly there. They're even narrowing losses, but yeah, not profitable yet. That ongoing cash burn immediately brings up the question: how strong is their position against everyone else vying for this slice of the sky? What about the competition?
Yeah, it's a good point. They are definitely positioned in a high-growth segment, but it's one that's subject to really stiff competition. They face both established legacy airlines, the big guys with vast networks and resources, and also other innovative mobility companies trying to carve out their own niches. Their differentiation, like we said, hinges on that accessible regional travel idea. This isn't about competing head-to-head with, say, a Southwest or American on major routes.
More targeted then.
Exactly. Instead, they're likely eyeing smaller airfields, maybe leveraging more efficient, possibly next-gen aircraft, and really building out network density in underserved corridors. This strategy is less about brute force and more about strategic agility in a specific niche. But for long-term viability, they'll absolutely need to achieve significant scale and secure robust regulatory support to truly establish a sustainable competitive advantage against such varied competition. It's really a race to dominate that particular niche.
Hmm. The narrative of a disruptive innovator challenging established players is certainly compelling. But the numbers on a balance sheet are just one piece of the puzzle, aren't they? The true pulse of a growth stock often beats in the market's perception. So let's now turn our attention to how Wall Street is actually valuing this unique venture and what its stock chart is revealing.
Okay, valuation. Well, given their negative earnings, Surf Air Mobility has no positive PE or forward PE ratios, so those traditional earnings-based metrics, they're not applicable right now.
Right, can't use those.
But for companies like this, without earnings, we often turn to the price-to-sales ratio, or PS. This compares the company's total market value to its annual revenue. For Surf Air, that PS is approximately 1.57x. That's calculated by taking their market cap of $188.43 million and dividing it by their $119.43 million revenue.
1.57x. How does that stack up?
Well, it's notably lower than some high-flying tech growth stocks, which might trade at 10x or even 20x sales, but it's also different from mature, profitable airlines. This specific number kind of highlights its identity crisis, maybe. It's not yet valued as a stable transport company, nor has it achieved those stratospheric multiples of a pure tech disruptor. It's sort of in a valuation limbo, reflecting its high-risk, high-reward profile.
That makes a lot of sense, especially for a company in its growth stage. So if traditional earnings-based metrics like PE are out, and you mentioned the discounted cash flow model probably isn't reliable because of the ongoing losses.
Correct.
What tools can we use to get a handle on its value? And what are analysts currently projecting for this company?
That's a great question. While a discounted cash flow valuation, or DCF, yeah, it isn't reliable due to those ongoing losses and the lack of predictable future cash flows. We can certainly look at analyst consensus. They're looking at 12-month price targets ranging from $5.56 up to $6.58.
Okay, $5.56 to $6.58. And where is it trading now?
Right now, it's at $4.40. So this implies a potential upside of, 26% to maybe 50%. This suggests that while the company is unproven fundamentally, analysts do see significant potential for appreciation from its current levels. They're kind of betting on its growth trajectory, it seems.
Those analyst targets are definitely something to consider. Now, beyond those projections, let's talk about the stock itself. How has Surf Air Mobility been performing on the market? And what does the technical analysis suggest about its current health and momentum?
Okay, the stock itself, it currently trades at $4.40, like I said, but that's within a very wide 52-week range between $0.90 on the low end and $9.91 on the high end. Huge swing.
Wow, 90 cents to almost $10. That's volatile.
No, extremely. Just in the past day, the range was $3.99 to $4.41. What's fascinating here, or maybe concerning depending on your view, is the elevated volatility. It's indicated by a beta of 2.95.
Beta of nearly 3. Can you unpack that a bit?
Sure. Think of it this way. If the broader market, say the S&P 500, moves 1%, Surf Air Mobility stock is historically swinging almost 3% in the same direction, on average. This isn't just high risk, it's a wild ride. It offers potentially massive gains, but also equally steep drops, which is really crucial for you to consider as an investor.
With a beta almost at 3, that's incredibly volatile.
Yeah.
For our listeners trying to make sense of this, what are the practical implications of that kind of market sensitivity? Both for someone maybe looking for quick moves and for a longer-term holder.
Yeah.
Are there any key price levels or indicators that investors should be watching closely?
Right. High volatility usually means, opportunities for short-term traders who can stomach those large swings. But it can be a significant challenge for longer-term holders, as their positions can see really dramatic paper gains or losses very quickly. Now, for key levels, critical price points include strong support near that $4 to $3.59 area. That could act as a sort of floor if the price drops. On the upside, resistance levels are around $5.10 to $5.56, which interestingly align pretty well with some of those analyst targets we just discussed.
Okay, support near $4, resistance in the low $5. What about moving averages?
Yep. The 50-day simple moving average, or SMA, is currently at $4.30, so very close to the current price. And the 200-day SMA is down at $3.57. These are commonly watched indicators for short-term and long-term trends, respectively. Looking at other indicators, the 14-day relative strength index, or RSI, is at 44.61. This basically suggests it's neither significantly overbought nor oversold right at this moment. It's kind of in a neutral zone. And while market sentiment, particularly if you look at social media, seems currently bullish, the broader fear and greed index is only at 39. That signals prevailing caution in the market overall. So there's a bit of a mixed signal there.
Interesting disconnect. Bullish buzz online, but overall caution.
Exactly. And despite the choppiness and volatility, the longer-term trend from its 52-week lows has actually been upward, which indicates some underlying positive momentum over time, even with all the bumps along the way.
That gives us a really detailed picture of the stock's behavior, highlighting both its potential for rapid movement and its inherent unpredictability. That's a fascinating dichotomy, retail sentiment buzzing on social media, yet the broader market's fear and greed index signals caution. How do you reconcile those two? Is one a better indicator for a volatile stock like this, or does this just highlight the inherent tension in these emerging plays?
I think that tension is exactly where the insight lies. For a highly speculative, high-growth stock like Surf Air Mobility, social media sentiment often reflects the enthusiasm of individual investors, right? It's driven by the compelling story, the future potential. It can absolutely fuel short-term momentum. However, the Fear and Greed Index, being a broader market gauge, reflects more institutional caution or maybe macroeconomic concerns. For you as an investor, understanding both is key. Social media can tell you about potential catalysts for quick moves, while the broader index provides context on the overall risk appetite for assets like this. Neither is exclusively better, they just paint different parts of the overall picture.
That's a crucial distinction for navigating these kinds of investments. Okay, now let's pivot to what's truly driving current sentiment around Surf Air Mobility. And what should investors be watching for? In the near and long term, things that could impact its price.
Okay, catalysts. Recent news includes some significant analyst upgrades, which always tend to move the needle. Canaccord Genuity, for instance, increased its price target from $3 to $3.75. They rated a hold. Piper Sandler also moved their target up from $3 to $4, rating it overweight. Overall, our sources show that 2 analysts now rate it a buy, and 1 rates it as hold. And that consensus 12-month price target averages out to $6.58. These upgrades and positive ratings certainly contribute to a more optimistic outlook, suggesting professional conviction might be growing even with the inherent risks.
Analyst upgrades are definitely a positive signal, indicating growing confidence from the pros. What about insider activity or that broader social sentiment we touched on? Are the people closest to the company or the retail crowd showing confidence, or are there other signals we should be aware of?
Well, July saw a pretty significant decline in short interest. It was down 34.8%, now sitting at 13.7% of shares outstanding.
So fewer people betting against it.
Exactly. It indicates a notable reduction in bearish positioning against the stock, which is generally seen as a positive sign. And on the social media front, like we mentioned, sentiment is notably bullish. That's despite the fact that only 43% of its trading days were actually green, meaning the price closed higher over the past month. This suggests that while the daily price action might be mixed, the general buzz and excitement around the company on social platforms remains strong, often driven by that vision of accessible air travel.
Okay, so with analyst upgrades, falling short interest, and seemingly bullish social sentiment, what does this all mean for what's coming next? What potential catalysts could move the price of Surf Air Mobility, both short and long term? What's the roadmap look like?
In the short term, the next earnings report is a big one. It's scheduled for August 12, 2025. That could significantly impact the price, especially if the results surprise positively on revenue growth or show a greater reduction in losses than anticipated. Also, further analyst upgrades and expanded coverage by more financial institutions will act as near-term catalysts that could draw in more institutional interest and capital.
And looking further out, longer term.
Longer term, the business model fundamentally relies on broader adoption of regional air mobility as, a mainstream mode of travel. That needs to happen. Potential regulatory changes that support its unique platform rather than hindering it will also be crucial. And of course, successfully scaling up its operational infrastructure, more planes, more routes, more staff to meet growing demand and expand into new markets. Macro factors like fluctuating fuel prices and overall travel demand are always relevant for any airline or mobility company. Can't ignore those. And finally, any significant M&A activity or strategic partnerships could be transformative. That could offer capital, technology, or market access, really reshaping its competitive landscape.
This raises an important question, though. We've talked about the exciting potential and the catalyst, but what are the primary risk factors we need to consider when looking at Surf Air Mobility, especially for investors considering a position? What are the biggest headwinds here?
Yeah, absolutely need to talk risks. There are significant stock-specific risks here that you just can't overlook. Its current lack of profitability, coupled with that ongoing cash burn, creates substantial execution risk. Essentially, they need to prove they can operate at scale and eventually become profitable before their funding potentially runs dry.
That execution risk sounds key.
It really is. And the niche nature of its services, focusing on regional air mobility, also exposes it to regulatory uncertainties. New regulations could either support or maybe hinder its operations, or adoption rates by consumers in this emerging market are still evolving. It's still a relatively unproven concept for the mass market.
Right. Beyond the company itself.
Beyond company-specific issues, there are broader market and sector risks. The transport and mobility sector itself is prone to volatility. The potential for recession could significantly impact discretionary travel demand. Shifts in consumer travel preferences or spending habits also pose a threat. And of course, competition is a constant factor, not just from legacy airlines, but also from other new tech entrants that might be better capitalized or offer alternative solutions. So it sounds like Surf Air Mobility is a bit like maybe a prototype electric sports car. Incredibly exciting, potentially revolutionary, but still needing to prove it, can reliably go the distance without needing a pit stop every few miles. The potential is dazzling, but the road ahead is definitely unpaved.
That's a powerful analogy, really painting a picture of the high wire act many of these innovative companies are performing. Okay, so after all that, pulling together these financial reports, market signals, future outlooks, what's the overall picture for Surf Air Mobility? Is it a good time to buy? And maybe more importantly, for whom is this type of investment best suited?
Okay, putting this into context, the overall rating based on our sources comes out to about a 5 out of 10, so right in the middle. Surf Air Mobility clearly offers rapid revenue growth and strong sector positioning in what is undeniably an emerging niche within air travel. That's the plus side. However, this promising outlook is significantly limited by those high losses, a highly volatile share price, and an as-yet unproven path to consistent profitability. It's really a textbook high-reward, high-risk scenario.
A 5 out of 10 suggests a balanced but cautious outlook. So given all these factors, who is this stock best suited for? And what's the recommended investment horizon for someone considering it?
Given the information we have, Surf Air Mobility seems best suited for short-term trading right now. The fundamental uncertainties, the ongoing losses, the sector volatility, they all make it a pretty risky long-term hold at this stage. Short-term traders might be able to benefit from the significant momentum and price volatility, particularly around key events like earnings reports and those analyst catalysts we talked about. However, longer-term investors should probably await consistent profitability and a much clearer, more established competitive moat before building substantial positions. For them, it's likely a waiting game until the business model matures further.
So while Surf Air Mobility presents an exciting opportunity in a growing sector, it clearly comes with its share of risk, especially for those looking at a longer-term horizon. It's definitely a company at a fascinating crossroads of innovation and financial viability. As Surf Air Mobility navigates its future, it kind of leaves us with this thought. In a world craving greener, faster travel, is the market valuing the revolutionary potential of a company like this? Or is it still too fixated on the traditional metrics of today? And for you, how do you weigh that innovative vision against the stark reality of ongoing losses when making investment decisions? Something to ponder. That's all for this discussion on Investing Talk podcast. Thank you so much for joining us. If you enjoyed this conversation and found it valuable, please remember to subscribe, like, and comment. It truly helps us grow. And if you'd like to support us further, maybe consider buying us a coffee. We'll be back soon with another detailed analysis into the world of investing.